Well, the market didn't have a good day, and Trump didn't do us any favors. When he was asked about the duration of the war, he said, well, it could go for 4 weeks, which the market was hoping for a quicker result than that. And he also went on to say, but, it could be a forever war. Wars can last forever. The market didn't like that, and because it puts ongoing uncertainty, specifically as it relates to the cost of oil, that overall impact on inflation, and of course the Fed won't cut if inflation remains sticky or even worse, begins to rise. And so the market has continued to de-risk. Now, in a number of videos over the last couple of weeks, I've talked about on the weekly time frame on the SPY what the RSI was doing, and I wanted to give you guys an update on that today because it has potentially moved past the point of no return. We have sort of fallen off a momentum cliff when it comes to the S&P 500. And of course, that also relates to the QQQ, but I'm going to show it to you on the S&P today. But I'm going to talk to you about some important small cap stocks and one large cap stock that is actually looking good still. It doesn't mean that we couldn't get a red candle, but with all of the downdraft, it's only producing green candles. And I'm going to show you something that I really like in the chart on that large cap. And I'm going to give you these two small caps, which if you've been holding it all in recent days, have been doing very, very well. And one of them is a small cap that we traded last summer and went up over 600%. Now, both of these are moving towards earnings, the two small caps. One is going to report Thursday. The next one is going to report March 26th. And I want to look with you at the chart. So how do they perform in the weeks leading up to an earnings event? And how do they perform after that? I think it's something that we should look at. Today was a low data day, but Wednesday we've got the ISM Services PMI for healthcare. Friday is going to be the big day. 3 data reports coming out at 8:30 a.m., 1 hour before the market opens. I'm sure the market will react. And if we're still in this downdraft from the war, which we clearly are, this could accelerate that move to the downside. We have non-farm payrolls. That's going to give us a macro data point, specifically if oil is going up, putting pressure on inflation, and the non-farm payrolls shows low jobs growth and higher unemployment. Well, the market's going to take it as a 1-2 punch, and we're going to go south much, much quicker. So hold on to your seats. As I mentioned yesterday with the VIX, the only time you can begin to calmly buy the future or go long is after the VIX calms down and gets back beneath 21. We're still elevated, which means that Wall Street is still concerned about what lies directly ahead. They're still hedging and preparing for a bigger downturn, and so should you. Welcome to Wall Street. This is the Stocks with Josh show. If you don't have a trade plan, I've got one for you over in my pro trading community, ChartGoat University. It's a place where you can learn, and it's a place where you can trade alongside me or one of my crown traders over 10 times a week. We've got the morning and the afternoon power hour covered. In the morning, I drop my A-plus scalp setups, which are provided to you in my custom indicator. You get the buy and the sell signal. And again, today they were printing signals to short this market. That's where the money was made. Come check it out. You can go to my website, which is the same name as my show, www.stockswithjosh.com. Come check it out. All right, let's kick things off with looking at the SPY because I want you to see where we're at and how dangerous it is. And unless we got an incredible catalyst, which would be something like the entire war has been resolved, there's peace in the Middle East, and the price of oil drops exponentially, and old Fed Powell drops a 1% rate cut on the market, which I don't see that for tomorrow, we're in a place where we're too close to the edge, and it appears we've already tumbled. Let's go look at the SPY together. All right, we're looking at the weekly chart, and we're going to analyze a couple dips that we've had in the past and what was happening with the RSI. Of course, everybody knows the real big dip that we had in 2025, massive fall off a cliff move and a V-shaped recovery, giving us an incredible run. Well, all 3 times the SPY did something very similar. Once it had climbed for a long period of time, this was the first run out of the bottom of 2022. It eventually got overbought, and then it broke down beneath the yellow moving average line. It made an attempt to cross back above it, but that was a failed attempt. Now, here's the most important thing I want you to watch. Once it made a lower momentum low, which we see it did right there, it went on to have another month of a free fall to the downside. Now, this particular move is back in October of 2023. We're going to examine the last 2 big dips, and then we're going to examine what's happening right now. You see the same thing happening here. We had that bearish divergence where price was moving up and momentum was moving down, but it wasn't until the yellow line eventually began to push the RSI line to make a lower low. It wasn't until we actually broke all the previous lower wicks of momentum on the weekly time frame we broke it right here, that we went on to have that huge flush down move that all of us regret not buying more of the bottom. Now, here's what I want you guys to see, that we've done something very similar. This is just the market repeating itself. Ever since that April low, price had been steadily climbing. For the last 7 months, we've been moving sideways. You can see that once again, we got overbought on the weekly time frame. And while price was still ascending, momentum was going down. But here's the important part. We have actually broken all the previous wicks. Okay, we had 3 of them. Today, as of Tuesday, March 3rd, we have officially broken all of those previous momentum wicks. All right, and that's opening up the door for a much bigger flash down. So I've been warning about this, and I think it's something we need to take very, very seriously. This is a market that's currently pointing strong bearish. And as I said a moment ago, unless we get some unforeseen shift in a headline news event, which would have to read peace, oil drops, rates drop, unless something like that happens, we have to position ourselves for more of a downturn. If you are not aware, if you do not know how to make money trading the market to the downside, come join the Stocks with Josh Discord and we'll teach you how to make money when the market goes down. All right, let's talk about some stocks that are working, because you have to remember that before this war event occurred, a lot of stocks have been coming down. Some of them in the AI enterprise story are actually down 50%. How have they been performing ever since this war has brought a lot of other stocks down? Well, they've got stacked green candles. And what does that mean? It means that this war event is being used for liquidity to close the short position, which means that once the war event is over, these could really begin to go all the way back up towards their all-time highs. I'm going to be talking about Adobe very soon, but today's video, we're going to talk about Salesforce CRM. This is one that I've been highlighting a couple times, and I just want to show you the chart, and I want to show you what I'm watching for. And I want you to tell me if you think it's worth investing in some Salesforce CRM right now. Let's go look at that chart. This volume bar is something we can't ignore. We got it after we got a 52% pull down from the all-time high price, okay? But specifically, I've talked many times about how much I like this engulfing candle. It's the green candle that opened below and closed above the previous red candle and the previous doji. Now, this is where we went into last week. We actually had this huge reversal signal. And this week, so far, as the rest of the market has fallen, you can see that we're getting ready to potentially climb above last week's candle, which means that CRM is advancing. And I'm just going to keep it very simple. I've said this to my community. I have never seen an engulfing candle on the weekly time frame on a good large cap stock that is down 50% from all-time highs. I've never seen that not be a winning opportunity. Let me know what you think of CRM. Now, I just want to be clear. What I do know that we have ahead of us is volatility, because we're in a volatile environment, which means we can print some red candles. But when you take a step back and you look at that stock overall, it's getting faced with a ton of selling pressure, and it's only printing 2 weekly green candles. Let's see how that finishes up the week, but I'm still interested in CRM to the upside. All right, let's squeeze in a couple more stocks. I'm going to talk to you guys about POET and AMPX. And there's some folks out there that maybe are not familiar with AMPX, so I thought I'd give you guys a little bit of a background on what they do and why I like them. And then I'm going to take you into the chart, because earnings for that is Thursday after the market closes, and I want you all to be prepared for what I'm going to be doing with my AMPX. So Ampress Technologies develops and manufactures high-energy density lithium-ion batteries using their proprietary silicone nanowire anode technology. Now, AI, robots, and then you're going to need the battery sources. You're going to need to let these things run and do everything that the engineers can dream that they could do. They've got to have the power, and right now we don't have it. And so this is one of the most innovative lithium battery makers. And in particular, where they're making their money right now, and they could be revealing some big government contracts ahead in this earnings this Thursday, especially because we're in the middle of war, is these guys are putting in the batteries that can accomplish the task with the drones. Mobility applications, providing battery solutions for the aviation industry, including drones and high-altitude pseudo-satellites, as well as light electric vehicles. So these guys are doing exactly what is needed right now, and I don't think the stock has pumped or gone as far as it could go. Let's quickly go look at the chart, and I'm going to give you both the bullish and bearish view. And I'm going to remind you that there are some small cap plays that if you're not committed to buying them on every dip, and holding them through volatility, you need to have a stop loss. If it will wreck your ability to trade or invest, you want to make sure to use a stop loss. It's one of my 4 disciplines. Let's go look at the AMPX chart. Let's highlight a couple things. I've got weekly candles on the chart. I've identified way back here when we were up here that this would be the support level that you'd be wanting to buy. If you bought it either time, you made money. But I want to highlight that right now on the chart, we have some mixed signals. You guys can see where I'm going with this. We have the potential of a bearish head and shoulders pattern. It's a little crooked, and we would see the neckline back into this support zone. Now, I would actually like to see that happen, and I would like to see that be in bounce zone because this does have the potential of going much higher. It's, again, the right company doing the right thing at the right time. We're going to find out Thursday if they've got a bunch of new government contracts. It's a small cap company, and so it wouldn't take that many billions of dollars to cause the share price to really take off. And so it's important to watch this. However, I want to be clear that if you are afraid of volatility and don't have a trade plan, if this thing doesn't go up, I want you to be aware that $11.40 could be the very best stop loss for you because, as I'm pointing out, we do have this bearish head and shoulders pattern, and I could see us pulling underneath it and coming back and retesting this ascending line of support between $10 and $9. And so if you are looking for a great swing trade, if it bounces hard there and we get another big volume node in that range, well, then it would be a great spot to go long. This has been a winner for me for quite a while. I brought this to the community back in June of 2025 when it was below $4. It actually went up 600% from there, and it really hasn't pulled back much. And that means that throughout all the volatility of the last 7 months, when a lot of things have been moving sideways, this has been steadily climbing and climbing. However, there are people that tend to buy the top, have no stop loss, panic sell when it dips. I don't want you to do that. So make sure you have a trade plan before you look at AMPX, and be aware that Thursday, they're getting ready to report earnings. We're in the middle of a war. It's producing the technology that AI, war, and robots needs. And so this might be one you want to be paying attention to. All right, I think that's as much as I'm going to cover today. I wanted to touch briefly on Poet. I will just throw up the chart and give you guys a thought about where to take precaution there. It's holding up very, very well, but this is the one I wanted to highlight to you, that it often pulls down right before the earnings. And in the last 2 earnings event, it reversed after earnings, right? It pulled down before earnings, it reversed after earnings. Could we pull down again into this critical range? We've got earnings ahead on March 26th and possibly reverse later. I wanted to draw it to you guys' attention so you could be aware of what I'm going to be watching for in the stock. And I want to remind you that stop loss on Poet at $6.67 may make sense. You let me know. I like Poet Technology quite a bit. I think this is another one that I want to hold into the next 3 years, and I think it could be much higher price than it is now. But again, what's your trade plan? Let me know in the comments. Hit that like and subscribe. Be aware of the SPY and what it's doing right now. We got to take precautions because it's already lost all the previous momentum swing lows. It's dropped beneath them, which means that over the next 4 weeks, we could have a rough ride. Let me know what you think in the comments. Peace and blessings, my friends. Take care.